All right, ladies and gentlemen, boys and girls, welcome to another CMT Lunch Hour here on what is a boring Monday. I was just joking in the green room that I got all the crazy stuff before, and now I'm getting all the boring markets, which is fine because I like these better because it gives us time to plan, right? And not necessarily a day to make a bunch of trades, not a day to get into a bunch of, trying to chase breakouts or anything like that, but a good day when the market's taking a chill is to plan and to go through and say, this is what I'm looking to do. This is, when this happens, I'll do this. When this happens, I'll do that. I always find those are way better when the market's just relaxing. I've got some relaxing music in my ear, right? Trying to cut back a little bit on the caffeine on days like today. And then you get ready, right? You recover, you get ready for when days go crazy. So let's take a little look around the market. I'll show you some stuff that I think is interesting. But as always, the point of this is to get your guys' questions answered. So whatever you want me to go over when it comes to individual stocks, crypto, forex for the nerds out there that trade that, uh, ask away in chat. I'll take a look at every single one. We'll go through them one by one after I do my rants. This is what I mean by an inside day, right? I guess really dumb it down to people who are new to the market is this is yesterday's high, this is yesterday's low, yesterday being Friday, and we are inside that. And then if you look at the intraday chart, this is the intraday action. Right? Up, down, up, down, up, down, just really frustrating both sides. So I know, as myself, as a quant, and a bunch of other quants out there who do run some day trading systems, some swing trading systems, all of that. There's a lot of them that just don't turn on their bots when the market's inside the yesterday's range because the edge of everything shrinks because there's less going on, right? Less going on means less edge. And that's what we're all looking for, right? We are all looking for some amount of edge on the overall market. So if we go into the heat map, we can take a look over overall what's happening here. Some green, some red, and that's kind of the grand scheme of things. Why we are getting this choppy action, right? You got to remember the market is just a basket of stocks, and when you have some of those stocks going up and some of those stocks going down, you get a choppy market, which is great if yours is one of the stocks that is going up. But you can see we have technology mostly green with some names kind of weighing us down here. And then we have finance mostly red with a couple names propping us up. Those are kind of the two big sectors. Each of these boxes represents the importance of this sector to the Russell 3000. You can do the same thing with the S&P 500. I just like the Russell 3000 because it gives more. But you can see, right, we have tech, and then we have healthcare and finance. Those are kind of our big three sections, right? Healthcare up a little bit, finance down a little bit, and we have this mixed when it comes to the different tech, right? AMD is doing well, AVGO is doing bad, right? Google's doing well, Netflix is doing bad. And when you have this action, you've got sideways market, just nothing's going on. So individual names is where we want to look at. So like Tesla, for example, had just this insane bounce. You can see this is a trade that I took this morning. Just insane bounce right off of the open. It's up, I think, from low to high, like 5% today. Right? This is the kind of stuff that can happen in a range bound market because individual news will shine through a little bit more. You won't have, for example, if your stock has really good news that day, but the market's tanking, sometimes that can drag down that good news. But when the market's doing nothing, stocks have their own ability to kind of move in their own directions, right? So, right, Tesla being an interesting one. This is an area that I was buying before, this kind of 250-ish zone. Broke out of that. We're now back into it. If we hold that 250 zone, that might be another area to look at. I also wanted to go over this. So IWM, we talked about how the SPY is inside its range. So the SPY is hanging out, not really doing too much. IWM gapping up, and the intraday chart looks way better. Right, we've still range bound, but you can just see a little bit more of a bottoming tail. Some buyers came in when we dipped back into this zone. Why is this important? Well, a lot of us like to trade small caps. Small caps are fun. Also, this kind of shows you a little bit of what the market is thinking about interest rates, right? So IWM has a lot of regional banks, has a lot of biotechs in it. So the fact that we have those regional banks and biotechs moving higher, those are very interest rate sensitive vehicles. So it means that the market right now is taking a bet on interest rates potentially selling off a little bit, which has also been bullish for Bitcoin. And this chart is awesome to me because, right, you don't have to be a technician to show this. Say, hey, right, we have a potential. Everyone was looking at this. It's going through here. Everyone was looking at this head and shoulders and saying, no, Bitcoin head and shoulders. Uh, if this plays out, that's going to be real bad. And so far, looks like we've turned around and pushed higher there. So the best head and shoulders are ones that fail. I love just failed patterns in general. Bitcoin looks like it's coming back up here to 108. If we can get above that, right, we've got to remember this 109 area, let's call it 108 to 109. This is the prior high back here. If we can retake that, everybody who'd look to short into this zone is now underwater, and you can see those right here. So this is what's called commitment of traders data. We get this every Monday, which is one of the reasons I like to do these on Monday. Commitment of traders data shows us how the large speculators are positioned. Are they long? Are they short? How long? How short? Where do they get long? Where do they get short? You can look at all of this from this commitment traders data. The right line down here means they're short. They've been betting against Bitcoin and a little bit of a tick down last week, so they're betting harder against Bitcoin. That's bullish to me because these guys are mostly wrong. So the fact that as we are kind of pushing up here, we know there's tons of people short this, that to me makes it even more bullish, right? It's if we get up to new highs, then you know all of these shorts, they have to be losing money, right? You have people short, stocks at all-time highs, no way you can be making money off it. So that's an interesting look there. We'll take a look at the SPY or the SP 500. We can look at that commitment of traders data. They're still flat. They weren't able to get very long. Look at these areas where traders were long markets before. We're not there. We've been short the whole way up, and now we just got so very slightly bullish action here. So we got to be careful to that one as well. Again, I like to take the other side of what a lot of people are doing. So if they're short Bitcoin and they're short the markets, those are two things that are bullish for me as well. So, all right, let's take a look here. Now that I've done my little rant, we'll go through some of your guys' setup. Anavex Life Sciences. You're saying breakout soon, major drug approval in December. Well, you don't know if there'll be a drug approval because if you did, that means you work for the FDA and you probably shouldn't be telling us. But a nice looking chart here, right? It's overall strong from $3 push up to 12. So that's like a triple or quadruple from there. That's a good look. And now we've just been getting tighter inside of this range. So I would just watch this downtrend. If this downtrend breaks, great. Again, I love areas with very clean support and resistance, not because I think support and resistance contains any kind of a magical formula, but it just lets you know where you're wrong and you can get out. So that's 750. So if you're buying at 850 with a stop of 750, you can just do your risk. You can do your risk off that, right? WRD. This stock, I don't see much here other than a potential bear flag. It's in a nice little downtrend. We Ride Inc. Yeah, so this thing is down from $40 to $6. Slow grind higher, but just broke its downtrend here as well. This is a bearish stock that's well under its IPO price. So I would do something like if you're looking to buy this one, you could take a VWAP. You could put it on its IPO price, and you could say, okay, if it gets back through there, maybe I'm interested. Right now, this is in a pretty substantial downtrend, so not something that I would be getting too involved with, but you can just put a line here at like, I don't know, what's this? So you put that VWAP. So the reason, I guess we should zoom out, the reason that these VWAPs are important is that this is the average market participants price of this stock. Especially I like them from the IPO price because it's forever. So if you took 10 bucks every day and you threw it in WRD because you really liked it, your average price is around 11.41. You can see here on the chart. So it becomes a pretty easy sentiment indicator or a sentiment flip, sentiment switch. If you're above that, it means on average, people who are long the stock are making money. If you're below it, you're saying on average, people who are long the stock are losing money. And you can see when we got there last time, we rejected it pretty handily. Also, big thing with VWAPs, I know you guys have Brian Shannon on, so I'm not going to spend too much time talking about VWAP because he's the king. A lot of institutions will fill orders around VWAP. It's a way to it's a measuring stick that they can use to say whether they're getting a good fill or a bad fill. So I like, and one good one to watch is this Tempest, right? Every time it got above VWAP, if you got involved, they were really good trades. And if you just stayed away when it was below its AVWAP from its IPO, you avoided a lot of pullbacks. So this is one that I actually bought a little bit of today because we're above its VWAP. It's breaking into the space. Uh, SMR is another one that I've played off of its IVWAP IPO a lot. You can see you put it right here. You ignore all this like pre-SPAC junk. I only started to watch this thing in this area, right? When it broke, came back, it tested. I got a good trade, little trade there. I bought a little more here. I'd love to say I sold these tops, but usually on the way back down. And I bought a little bit more in this 15 area. So I think my average is like 12 now, but I've just been buying it if it holds its AVWAP and then just selling little bits as it comes off. So interesting way if you've got a new IPO or a new issue, things that you can look at in order to get involved. What was that one? CoreWeave, CRWV. Right, this is the kind of last one that I took because it IPO'd here, shot up right off the gate, but then spent about a month or so under its VWAP. When it got back above, that was an interesting one that I took some on. I'd love to say, right? I just rode this the whole way up, but that would be dishonest. But still a great trade. Nebis Group. So this is NV, which means this is a foreign company. It's fine looking chart. It's really kind of stuck within this range, so I don't really see too much, but holy smokes, I just noticed what a range from $86 to $14 back up. Almost makes me think that this is like a new company starting here or something, and that's like an old ticker or something that didn't update. If it is, let me know. It's breaking up to new highs. That's nothing you can mark against that, but it's gone up like 200% in a straight line. So just be a little careful. Looks a little bit overextended. You want to see it stick the landing today. Today is kind of a pivotal day. You want to see it stick the landing over that 51. APLD, I'm hoping this one pulls back a little bit more. So this is one that was mentioned a couple times, and I remember mentioning on probably it would have been last Monday. When's last Monday? Right here. Saying, hey, it's probably getting a little overextended at this number, and it didn't care, right through it. So this is the zone, this 11 bucks or so on APLD. Of course, they got that news with CoreWeave, and that has news with it was OpenAI to CoreWeave, CoreWeave to APLD, right? So like the 5 degrees of Kevin Bacon thing. So this is the zone. So as long as you're above this, I think you're onto something. Perfect world, it pulls back and kind of tests that zone just to show that there's buyers that are going to defend that area, and off it goes because this is a lot in a straight line. It's now 350% off of these lows in pretty much a straight line. So this is why when people say things are looking a little bit overdone, you don't short. Maybe you take some profits, right? Maybe you feed the ducks a little bit. You realize some of that gain. However, you don't end up just really shorting against this because that's a freight train, right? So for me, I can't buy it up here after it's done 350% in a straight line. Perfect world for me. It's got to come back. It's got to base for a while. It's got to and all the time it has to hold this $11 breakout zone. Super clean zone. If it comes back in, it tests, it holds that, starts to settle in, reverse higher. That's my trade on APLD. Other than that, I just missed it. Right? It's when I was up here at 10, I was saying it looks a little bit overdone, and then it goes another 50% in pretty much a straight line. So MYNZ. I'm sorry. So this one is most likely going bankrupt. Um, there's nothing that gets me interested in a stock like this other than the fact that it's probably going under. And if you, this was never $1,000, right? It's one of those, I talk about these all the time. They get under $1 and then they have to do a reverse split in order to stay listed. That is quite often the kiss of death. The if you the reason for it, again, you have to stay over $1 to get listed on the Nasdaq, right? Uh, there's a lot of like shenanigans that a company could do to get its stock up there. Like not even, and I'm not saying shenanigans even in like any sort of a legal sense, but do some insider buying, right? Take a, if the CEO loves the company, he could take out a loan, he could buy some stocks that pumps the shares. He could do all kinds of stuff, right? You can just um, there's a lot of things that the company could do. It could do like press releases of future plans it has, like all kinds of stuff the company can do to try to get its price up there to stay listed on the exchange. If it has to do a reverse split in order to stay listed, that means none of those other games either worked or the company's not smart enough to do them. They can't buy back their own stock. They can't get insiders to buy their stock. They can't strike a deal with a bank to have them buy their stock. They can't. There's nothing that this company can do to stay listed. So generally speaking, it's the kiss of death, right? So that happened right here at $8, and now it looks like it might have to do it again. So you got this company that's just hemorrhaging money, and uh, yeah, their reported income was like 300K. I bet you a lot of people could raise their hands and say they made more money last year than this entire company together in revenue. So yeah, just I look at this and say, if you believe in whatever they're doing, good, but you have to have that pathway of, it says biomed, right? So I know it's some sort of biotech, that whatever they're doing is going to change quickly. Otherwise, they're just going to continue to reverse split on their way to zero. What was this other one? NAVITAS helps if you put the tickers instead of the full names. Oh, I see this mentioned a few times. This NVTS, right? Nice looking breakout today, right? You can see this one probably. Anytime you see a line like this, it means my algo was looking at this at some point, probably to have come back and filled this gap, but it didn't. So we are consolidating quite nicely after this big gap up. So some sort of positive catalyst. Don't care what it was, but market liked it from $1.50 to $1. And then you look at those, especially because this one cleared a big base. This was a big gap, right? It's the highest price in what, like 2 years. So a big gap clears a big base, and then you just want to see it hold on, and it did exactly that. It just held on every time. Sellers came in, they were bought up, so this is a really constructive looking chart to me. So you want to see it stick the breakout today, right? You don't want to see it trade back below this area at the end of the day. If it sticks the breakout, though, I think you're probably good to go. This would be one that I would go to. Let me do it here for you. You'd go to FinViz, and you go NVTS. If this is heavily shorted, then that's just another short interest. It's another knock forward at 20% short, so it's not nothing. So 1 in 5 shares of this guy is lent out short. That's not nothing, right? So there's probably a lot of people very underwater that they're short this. It's not an insane short float, but it's not nothing. So nice little breakout today. Again, you want to see it stick the landing. You don't want to see it crash back down and get under this price by any means. You want to see it hold there. But that's a nice looking chart, right? Overall, still in a downtrend, but it's kind of broken. If you start to draw trend lines from the highs here to that high, right, it's broken that downtrend. So it's done a lot. It's done a lot of good repair. So the question is, where to? $11 is where it failed back here. And then above that is kind of $18. So this is one of those D-SPACs that, like most D-SPAC companies, fell apart. But you see how I was talking about that other one, couldn't stay above a dollar to save its life. These guys figured it out. This is more of a company that I'd want to put money in than that other one because they were able to, they got close, right? They got into the buck 50s. They got close to having to do something in order to stay listed, but they were able to figure it out. They were able to dig in and they were able to gap up. So we want to buy companies that are doing well. You don't want to buy companies that are doing horribly and bet they do well. So I like this one. It's a nice look. I'm going to make a note here. Here goes NBIS. So there's NVTS, NB, a lot of N's today. Oh, this is the one that I already mentioned. Yeah, so there's a nice little push out as well. So making new highs again. I don't know if this seems like it's almost another company or something. The fact that it went from $90 to 14 and then back, that's pretty wild. Makes me think this is like a restructuring that happened in here. Just by looking at the chart, this looks like some sort of restructuring. I could be wrong. So nice little breakout, but again, like I mentioned to the other guy before, little extended, 51% gain in just a couple days. I don't want to be buying into those. If I'm holding some, I want to be selling into those, and then I want to put this on a list for some sort of pullbacks. The reason I like that NVTS here is because it had already done its consolidation, right? So it was up here the end of May, and it spent what 2-3 weeks, and now it's breaking out again. That to me is more interesting because it's done a rest for a couple weeks, and now it's continuing. That to me again is way more interesting. I see Stay Invest. Hey, how's it going? BBW. This Build-A-Bear. As a dad, holy smokes, they get you at this one. That's for sure. Right there, right off the bat, they're going after the kids. Oh, look, this is your favorite character you can build. It'll only be $1 million. Nice little gap up here off of earnings. So again, this is where technical guys are outsourcing everything to the fundamental nerds. They beat on revenue, they beat on earnings. Those are both good things. The market reacted well. And then it's come back in, and it's come back in to 46, right where it broke out of. Perfect. So this chart is textbook. Like, this is a nice looking chart because it had breakout, pulled back to where it broke out from, put in a nice little hammer candle, and now it looks like it's drifting off of. So to me, a trade on this one becomes pretty simple. If you like it, for me personally, that's where the buyers took control at like $45, and then you just try to say, okay, does the math work? Right? Do I like it here? Do I think it could get to what? So a 2-to-1 risk reward is these prior highs. Do I think it's going to make an extension move from there? Well, then we're talking 3-to-1 risk rewards. I'll take a 3-hour trade any day of the week. Don't need to be right very often for that to have happened. So that's a good push there. Again, as a dad, they get you, right? They're like, oh, free this, free that, and then every little accessories $1 billion. Erickson. See, it's one thing, again, I love about charting. I don't know why I drew this line. I don't know when I drew this line, but it was there. I don't know when's the last time I looked at this guy. And I still agree with past Mike, who drew this line here, right? You've got a lot of prior highs in through here, and it's pulled back and it's testing those prior highs. So just like I mentioned with Build-A-Bear there, I think your trade becomes pretty simple. I would probably look for some momentum over this candle. And the reason that candle in particular is because it gapped up big that day and then sold off all day. So I'd want to see it above that area because there's probably a lot of longs trapped under that. I'd put my stop under this candle, and because that's the last place buyers took control, and it's at a longer term logical level, and then just look at it and say, well, do I think I can get? It's always two times my money for me, right? So if I buy it at 866 and I put a stop at, I don't know, 830, do I think it gets to 930? And it's not because these numbers are magical. It's just because um, I want to. I I'm a quant, so I think of everything in these whole statistical probability rounds, right? You can think of it as odds if you play poker. What are the odds that I think if I buy it there that that trade will play out the way I drew it? For 2 to 1 risk reward, if it's any better than 50-50, even if it's a little worse than 50-50, it's going to be a positive EV bet. It's going to be a bet that I want to take over and over and over and over again. And then in the long run, it's going to make money. Because again, none of us know. None of us know at all what is going to happen with any sort of definity. If you have convinced yourself that you do, or you follow someone who says they know something, run. Right? We are just playing a game of probabilities. Right? This is why you don't bet the house on every trade and all those things that you know. So I just look at it like this: say, yeah, that's a pretty good bet. The fact that it's in an uptrend, the fact that it's hold that level, I think that's a pretty good bet. So it might be a trade that I take a look at. Cake, Cheesecake Factory. Never been to one. Don't have them up here, I don't think, as far as I know. I like cheesecake. That's the only reason I'm wondering. This is a huge level for cake. Look how far back this level goes, right? Resistance, resistance, resistance back here, and also back here, right? So if we go to like a weekly chart, this is a big level. Now, the bigger the level, the more BS happens around that level. Just a warning. The more you'll get, right, breakouts and failed breakouts, and it looks like it's going to go, and then it crashes back down, and all of that kind of stuff. This is a great looking chart to me. I just want to give that warning that you want to see, you want to buy these breakouts, but you want to know that there can be a lot of games around them. So I don't want to have that tight of a stop, which means I don't want to trade that big. But from the longer term point of view, that kind of a breakout is super interesting. I'm actually screenshotting this one because, yeah, so that's an all time high potential breakout here on Cheesecake Factory. So good luck. Good luck. I like this one. But yeah, not for I want to buy it and scalp it over a couple days because, again, there's a lot of shenanigans can happen at all time highs. And a lot of people who are maybe invested way back here in 2021 and they finally saw their accounts turn green today on this position, and those people quite often hit the button to sell, and a lot of that kind of nonsense. But a nice look for sure. There's WRD again. There's Eric again. Answered those. Chipotle. I don't even remember. Is it CMG ticker? There we go. This has been like a king investment for a long period of time. What from IPO? It's always the most boring stuff that does stuff like this, right? If you just bought Chipotle during its IPO and walked away, you're up like 6,000, 7,000% at its high. And even on this pullback, you're up like 6,000%. Insanity. But on the short term chart, I don't really see anything here. Right? Potentially, this was like a little liquidity grab, failed breakdown that's going to continue. Long cheesecake, short Chipotle. Is that the pairs trade to take? Is that the side that's what Chipotle is more healthy food? So is it long long garbage food, short healthy food? Is maybe, but could be right. This looks like this could be hammering out a low, right? It could be sideways consolidation. It could be nice action at a potential low. Uh, Obviously, could be the case. And if you really like it for some sort of story reason or long term trade or fundamental or whatever, I think you can get involved there, and you can use 44 as your stop, which isn't that big of a stop at all, right? So you're not risking a ton of money. But yeah, I look at that and I say there's really nothing that kind of interests me too much about it. Above this, maybe, right, for a little bit of a trade, but I just look at this and I say this is range bound. And sometimes these ranges, well, you can look back here on Chipotle. Sometimes these ranges take years to develop, and I would rather just be in something that's really, really kind of kicking off. And we just saw a restaurant chain that's doing a lot better. Bitcoin through 108,000 there, if anyone's paying attention. I know they're going back off topic again, right? And I'm not like a huge crypto guy. I have a, a crypto account. I trade crypto, but I'm not like a laser-eyed whatever. I just think based off the positioning that we saw here, that everybody is short Bitcoin as it's doing this. I think there could be a face ripper over the next couple of days. So that's just me. I don't know nothing, but that looks really good. I just looked down and saw that it was doing that. Berkshire Hathaway. I don't like the right. This will always be known as the Buffett candle, right? This was his retirement candle right here. Then it's gapped down and now it's leaking. You can see I drew this out because this was the candle after he announced retirement, and I was hoping that this would hold, but now we're leaking through here. So he's still going to be involved, right? He's still going to be trading. He's still going to be doing the investments. He's going to be doing a lot of this stuff, but I don't know. This looks a little broken to me. So I would just wait personally until we get to or near all-time highs again and then go from there. There could be just a lot of digestion of old heads maybe leaving, new people buying, that kind of thing. You don't need to worry about waking up tomorrow and having Berkshire Hathaway up 200%. So you don't have to get really excited about chasing those highs. So, nice little sideways consolidation, little breakdown here. Again, a lot of things that have me a little worried. Um, EPD, Enterprise Products Resources LP. Well, there we go. Products Partners LP. What do you do? Never heard of you. Oil Services. Ugh. Range bound, choppy mess. Nothing really here to look at. Plus, when I saw oil, the reason I went yuck is because if we just go CL oil futures, oh, you got to get rid of this. It always gets so screwy when Bitcoin or when oil went to zero. But we had this multi-year support at 65. Then it broke down. Now it's coming back to that from the downside. Jeez, like could you just rip through there? You could. That would be like a hell of a failed breakdown, and there might be a lot of people that are trapped there, and maybe we push higher, right? But if you look at the CL, this is the same commitments traders report, and they're long, so that makes me think it's more of a camp that it's going to sell. So yeah, just a lot of scariness when it comes to oil. I think you've got an administration that's trying to keep prices down, right? Drill, baby, drill. So a lot of things make me worried about just kind of oil in general. Circle. There is no analysis I can do from a technical side on Circle. I will remind everyone that there is an 80% probability that sometime in the next 6 months, I know I say this over and over again, that the IPO has undercut its IPO price. The reason I say it a bunch is because it's just true. You can go look at it. There's a lot of stats out there. 80% chance does not mean 100% chance. It means an 80% chance. So it means there's a 20% chance that this thing just never sees this price again and just rips. Look at Newsmax and Max. Right? There's your IPO price. And then what was the other one recently? Webull. right? IPOs, rips, right back down. So CRCL, there is a large probability that this thing will be back through its IPO price at some point. Other than that, there's no technical analysis I can do on the thing. Things just been ripping from the open. Uh, right? If you do, you can see here, I took a little short on this guy this morning. That's just a system that I have in place to fade gaps. But there's no kind of analysis I can do other than if like this candle gets red, it's probably time to go. Like if we go red on the day, which is what 107. If we break under 107, maybe that's going to be a top. Most of these things they happen like that, where you have a big move and then you have a massive red day, and then what you have after these massive red days is you get people going in and buying the dip and saying, "Oh man, this was a $300 stock just yesterday and it closed at $52. Get me in. This looks amazing. Such a cheap price." And then they fall apart and they go right to zero. Not to zero. This is an IPO. It's probably actually, right? You had the smartest minds in the world saying what's a fair value for this company, and all of a sudden it's 10 times that, and then it comes right back to it. It probably makes sense. Same thing with Weeble. Right? They have these massive gains, and then it has this huge red day, and usually that first big red day often, not always, often marks the top, and then from there it's a bleed back down. So still a lot of time in the day, but is this that first red day that's maybe going to show you that that's a little bit of a short-term top? People kind of exit after that. A lot of people I know, hedge funds, things like that, that would have gotten the allocation at 35, I think was the allocation price on this. They're just waiting for some sign to take that money and run, and the first red day, that might be it. NVTS we've already done. We go CELH, and again, make sure you guys are asking questions. I got 20 minutes left here. I'll go through as much as I can. So this is a good AVWAP lesson, I think. Again, if you really want the AVWAP lessons, as Brian Shan does Sunday nights, I usually try to tune in as well. He's the goat when it comes to AVWAP, but the idea is pretty simple here, in which this is if you started to dollar cost average into CLH at the worst possible time, the all-time highs, this is your price over time, right? So this is why these areas get super interesting, because we're back through that now. So great. It's breaking out of this base. So I like the fact, like, check one is that the super inflated thing came back to what seems to be kind of a fair value, right? It looked like at $100 it was probably dumb. At $17 it was probably dumb. Came back to like $30, $40 seems to be some sort of more fair value. Spends a lot of time under this anchored VWAP at statsedgetrading.com. We have a system to trade this kind of exact same setup. I break through this anchored VWAP, and not super accurate, but every now and then you nail one. So I like this setup, and I like the fact that it's breaking here, because again, the average market participant, even the guys who bought at the worst time ever, they're losing money. Also means if you started to short from this point, you're losing money. So a lot of things look good in this zone. So I like this breakout, and I think you can lean on this kind of 35 as a low, and you just risk yourself there accordingly. Could it go back to all-time highs? Probably not, but right, anything can happen here. MBIS, people are asking so much. I've looked at this one a bunch. What's actually happening here? Wall Street bets. MBIS launches in UK, expands Britain AI infrastructure with NVIDIA Blackwell chips. Fancy. Again, so the same thing from MBIS, always nice looking breakout for sure. little overdone. You're up like 50% in 5 days. So I'm not chasing a stock that's up 50% in 5 days. I'm not insane. It means could it double from here? Absolutely. But the way I look at it is I always put my stop at the last place that buyers or sellers took control. That's sitting right here. And that's a long way away. So um, I can't risk from here to here as a sensible human being. So if you buy it up here, where do you put your stop? Where are you wrong? You always have to know where you're wrong in a trade. Just a little too high for me there. AUTL, someone's saying. One of the bad guys, but not as bad as some of them out there that I've seen. So it's something, I guess. Sorry, I got a sick kid. I'm chugging coffee. The fact that it's gotten back above this prior support right here is obviously a good thing. I think that's really one good winner for it. It is hemorrhaging money. So when something is just bleeding money like this, you have to do, I think, a little bit more. Again, as a technician and a quant, I don't do these things. But one thing that I think you have to do if you're investing in one of these companies that is in an obvious downtrend, right? So whatever they're trying to do in the market is not working. They're in an obvious downtrend and they're bleeding money. Money's got to come from somewhere. If you're losing money every quarter, you can either raise it from external parties. You can do what AMC's been doing for the last 10 years and just dilute shareholders into oblivion. But it's got to come somewhere or the company goes bankrupt, right? You either have money or you're toast. So the question you got to ask yourself with one of these is a couple things, right? Technicals play a part, right? So I think if you're holding 175, you're probably good. What is going to be the thing to make this company stop bleeding money on a very consistent basis? Right? Something has to change. You can't lose money forever, especially not in a 5% interest rate environment. Maybe in a zero interest rate environment, you can bleed money forever. In this one, you can't. So that's what you always got to ask yourself is, hey, what happens if we get, like, what is going to happen to make this company a profitable company? And how long is that going to take? So if you're investing in a biotech, how this looks like is you look at when their FDA results are, and then how much cash do they have past that. So, if they're reporting FDA next year and they have cash to last them a year or two beyond that area, then that might be a good one to look at because you've got that room. Um, if it's one of those things where they don't, then the money's got to come from somewhere, right? It's going to come from you if you're an investor in it, right? If they can't raise money through banks or private placements or things like this, it comes through off the back of retail. So BYTE, which is a crypto, I think my first crypto request. Nothing. I have nothing to say for you here. Sorry. This thing hasn't, right? It does these spikes and then it crashes back down. Spike, crash back down. Spike, crash back down. Little spike and no liquidity. So be very, very careful here. Not something I would touch. Bite dog token. Is this the same right one? Crypto. Yes. Yeah, be careful. Um, coin. So coin's going to move a lot with Bitcoin, right? And Bitcoin is trying to move here. We're still over 108, which is great. Bitcoin's trying to do a little bit of a breakout. So I think if Bitcoin breaks out, this is a great looking chart. So long term, right, this is a nice looking cup and handle. This is like a technician's dream chart. It's a good place to hide out while we're waiting for Bitcoin to move because they make money. It's good, right? Instead of hanging out inside a miner that loses money over time, you hang out in one of these guys who makes money over time. Great. Inclusion, the SP 500, all that stuff's good. the kind of consolidation that happened here, you're just looking for that to potentially to resolve higher. I think this trade becomes an easy one, right? You're buying if we get above that range. Your stop loss is maybe below that range, and then you see, do we break new highs? If we break to new highs, you're making 2, 3, 4 times your risk. That's a good trade. But if Bitcoin just crashes, this one's going to tank with it, right? So this, you're tying yourself to the price of crypto anytime you play any of these crypto adjacent kind of names, right? You're part of it. Somebody is spamming this one. Anytime someone spams a symbol, I automatically get worried about it. Yeah. This is why the person spamming the symbol is because they're quite probably a bag holder in the name. This is another one where they have to reverse split in order to stay listed, not what you want to see. You want to see a company be able to remain listed on a stock exchange using its own merits. So they've already done a reverse split right here, a 1-to-4 reverse split a couple years ago. They continued to hemorrhage money. They were able to do nothing to fix their business in any way, shape, or form. They've gapped down to what would be a near bankruptcy state. Now they're up a little bit from there. So they are probably going to go bankrupt. You see phase 3 coming in July. You're just YOLOing that then. That's it. It's just a YOLO on whatever drug they're doing and if they're going to pass phase 3. The market doesn't seem to think they will. The market doesn't seem to think that whatever they've got on the go is going to be enough to be worthwhile. So if they pass phase 3, great. But it's another one of those conversations I said with the other one. You got to figure out cash. You got to figure out how much cash they have. Doesn't help you if the company passes phase 3 and they don't have the cash to market and to sell the drug, right? Then you're just hoping that another company comes and buys it for like 30, 40 cents and you move on with your day. Yeah, this one very much, if they fail their phase 3, it's probably bankrupt, right? So be careful. It's why I was talking to someone about the you guys know I've been talking for a while. Big psychedelic um, enthusiast. Someone, I think these are going to be the next kind of major talked about event at some point, right? And I have kind of thrown my stake in a little bit with MindMed. They asked why MindMed over some of the rest of them. It's because they have a bunch of cash. So I know that they can have hiccups and all of these things. And even if they're not the one who's first to market, if they're not the one who's figures it out before everyone else, I like to go where the cash is. So there's like CYBN, there's a whole bunch of these one. CMPS, ATAI, and if as we're looking at all these charts, you can see that all of these ones are down much more than MindMed, who hasn't really done anything in the last couple of years, right? It's just been chopping sideways, and it's because they have cash, right? So this IHXL, this is a binary bet. Make sure, right? If they fail FDA, this company is going to go bankrupt. I don't even need to look at the cash on hand to know that they don't have any. If they pass FDA, do they have the cash to market the drug and produce the drug and right manufacture, shipping, selling? The drugs just don't appear. If not, then they pass FDA and then Johnson and Johnson or something comes along and buys them, right, for like 25 cents as opposed to 18. Right? They're not in the business of spending a lot of money on things they don't necessarily mean. So again, just be careful with these, right? Unless their drug is going to change the world, sometimes you get a little bit of a push. Now, again, we're talking huge numbers, so you're risking 0. So you better hope that a double is very possible, because that's just a 1-to-1 at that point, right? You're looking to get to like a buck or something to make that kind of worthwhile, because a 0 is very possible. ALIT. So you see, I always zoom out first, right? And this, again, anyone wants to get in technical analysis, you notice a lot of us do this. We zoom out. We say, okay, where is this in the grand scheme of things? Well, it's under $6, and it had support at $6 for years, and then something happened that was bad to it, and now it's under $6. This thing pays a dividend. Why? What is this? Who are these guys? Information Technology Services. Well, they pay a dividend, and hell, a 4-cent dividend on a $5 stock. It's not bad if you think they're going to be able to continue to pay it. But this is an ugly chart. Right? Broken in a downtrend, below support. This is a worrisome. Oh, I missed one. GLXY. Galaxy Digital. So if this is a minor, then they have a little bit of problems. Sometimes you just have things kind of drawn out. I don't know why I did this, but I did this. Well, when was last Monday? Last Monday would have been here. So that's probably why I drew this out the way I did. This is just an anchored VWAP from this high. Again, this is a better looking chart. It's a nice kind of cup and handle, potential cup and handle kind of look here. I think it's pretty simple. Maybe you get above this anchored VWAP from this prior high. You get involved there. I've got a stop loss down here. And then I've got roughly two times the risk drawn out here. So it's a good little play. It's a nice looking chart overall. It's got like this vote of confidence. You know, this is why we use logarithmic charts instead of arithmetic charts. But 35 is all-time high, so that's like a 50% gain from here. That's a good one. A nice looking chart, nice looking little cup and handle. I think it's got a relatively quickly, you want it above kind of 25. So within the next couple weeks, you want above 25. CDNS. Yeah, really bullish chart if it can get to new highs. So whatever happened here worries me. I think I remember this being some China related whatever. So the meeting that's happening right now about China-US relationships, definitely watch that for sure. Right? We have a nice broad range here. You could play the range. For me, I hate playing stock ranges. I want to see a breakout. So I want to see a pretty quick resolution up to, for me, it would be I'm just going to wait until it gets up to 320, 330, and then just buy it then. And then I can just sit on my cash until that point and not get super excited about it. It's up to you if you want to go in a little early. But I think I remember this being a China related kind of column. So let's go. Oh, here we are. Yeah, but other than that, it's just big range bound. I hate range bound stuff because you're kind of losing. You're losing money in terms of the thing not going anywhere. So you're not. It's the two thing, right? You got the chance to lose money like everything else is, but you also have the opportunity cost. Where could you be putting your money into something that works? So again, it would be like wake me up when we hit 330. HPE. Hewlett Packard Enterprise. This is another one, right? That's nothing I see here interests me too much. We filled the gap. We had this kind of gap up and sell candle, and we're just stuck in the middle of this range. And this range even isn't that big. So from here to here, like 30%. So if you think it's going to grind its way back up to highs, yeah. But just it's range bound. Like show me something in a trend. Show me something outside of a range. This one's one of those, like if you want to collect the dividend, cool. ASTS, I love this one. I own some of this one, just full disclosure. I bought some this morning right off the open as it broke out of this downtrend line. You can see where I'm targeting. It hit the first target already. Second target's right up here. I think you got the news of the two dudes breaking up that loved each other. That could help. I like the fact that anything that has ripped like this and hasn't given it back, right? 1,800% up and then just sideways for months. I like the fact that it's a 30% short float. So 1 in 3 shares are short. There's a lot of things I like, but I am talking my book. So just full disclosure. But yes, I like the look of this one. Again, it's a little bit too extended for me to buy now. Even buying it on the open scared me. but I know I can just probably risk down to this area. But yeah, a little bit overdone. I would say you want it very quickly through $40 because then all of those shorts are having an awful time, and there's a lot, and that's what we want, right? It's short combined with trend, right? Short float and trend. Those are the two things. Um, Again, the shorts from AMC, they won, right? The stock's down 99 something percent. It's got to go up like a billion% for them to feel any pain at all. This one, it's at all-time highs. So the shorts are definitely not winning. They're losing horribly. If you make a new all-time high, you know every single one of those shorts are underwater and in pain. So this is a potential short squeeze setup for me, breaking out of this really long-term base. You've got the news that's hot, you've got all that, and you've got roughly, I think it was like 27% when I looked, so roughly 30% short float. So you're talking 1 in 3 or 1 in 4 shares out there short. That's why I like the look of this one. But again, it's very hard to say, hey, buy it here when it's up 60% in 4 days. It was really hard for me to buy it up 20, 30% or so in that time. So, um, yeah, it's it's a great looking stock, a little bit worrisome. CLUR. Got a couple minutes left here, so we'll maybe do a little lightning round. I must have been asked this one a lot because look how this, again, anytime I'm not drawing, there's no system drawing these, means I drew them before. I think if you like it, you lean against a buck, right? If it loses a buck, you go. And you just make sure that math works for you, right? So I think you lean against that level. Could be there forever. I would do some research into what this one does fundamentally. Um, Russell 3000 at the end of the year. It's 97% of the tradable universe in the Russell 3000. That's not news. You need to know what actual news is going to wake us up from this, not inclusion in the everything index. This one looks like it could be breaking out. Nice little consolidation going on in here. So if we're breaking out of that, that looks nice. The fact that it did this massive move, kind of just like I was talking about the ASTS, and then didn't die, didn't crash back down. That's something to definitely take a look at. I think this one is a good look. If it can look at all the topping tails here though, at $4. So you want to see this one have a solid close above $4, right? It's like I've been tweeting a lot about this one because I'm in a bunch. This FTech, right? You can see all these topping tails it was doing up here at 8. That's why when it closed above here, or 180, it closed above it, and it was a solid close above that. It means whoever was selling here is gone now, and then you can see what it's done the next day. So, right, I bought it a little bit on this breakout, and then a little bit on this close, and that little bit I'm up like 10% on. So, when you see a lot of those topping tails, you want to stick a landing above that price. So, one more NXPI. This is a semiconductor one. Semiconductors are breaking out. If you go to SMH, right, that's a nice looking breakout. And then you go to NXPI, it hasn't yet broken out. That to me is some relative weakness, and I want to be involved in relative strength. So it means I would want to go to the stronger looking names as opposed to the weaker ones. So, thank you guys. I got a couple names written down, and that's one thing that I absolutely love about doing this is that I have things written down. So I get to go through charts. Hopefully I give some value to you guys, but I get some value from it as well because a lot of these names I've never heard of. They wouldn't have come through any sort of a list that I would have looked at. So the fact that you guys can bring them to me, that's interesting. Again, the only thing I'll kind of say is buy stocks and uptrends and stay out of stocks and downtrends, and your life becomes a lot easier. Thank you all for coming by. If you want to see more from me, go to sats@trading.com, and I'll see you guys on Friday.